Hello, you're welcome to day 4 of our monthly educational series in the month of July, and this month we're talking about investments. Today we're continuing from where we left off yesterday, talking about investments, and I want to talk about the medium to high risk investments. Those are the ones that will give you as high as 35% returns on your investment annually. The very first one I want to talk about is something I had spoken about. I think it was in the month of April when I was talking about raising funds for your business. Who says that you cannot be the angel investor? Yes. So the very first medium, well, in some cases might be very, very high risk investments that you should consider is investing in small businesses. It's amazing, but the average business in Nigeria previously, the landscape is changing. There's so many economic challenges that we can't be as predictive as we used to be, but it's still the most thriving space in our economy, and those are the small to medium scale enterprises. They bring in the best type of income. They're the ones making it. They're the ones down at the grassroots. They're the ones addressing the problems of the people. And personally, I have found out that even with the high inflation rates and the hike in prices of all commodities, people are still buying commodities, as in fast moving consumer goods are still moving very, very fast. So a very good place to put your money is still in small businesses in Nigeria. But as with every type of investment, you need to investigate before you invest. I mean, the word is invest is in the word investigate. You need to be sure of exactly where you are putting your money. You need to be sure that your money is safe. You need to be sure that your money will be used judiciously. And if you're investing in a small business, please, if you can, take part in the running of the business. Not necessarily meddling in the day-to-day affairs, but make sure that the person in charge of the books is somebody who's qualified to be in charge of books. Make sure that the person has some accounting background or education. Make sure that the person knows how to separate business money from personal money. There's some rudiments that have to be in place before you can give your money to someone to run their business. If you can go into partnership with that person and be a dormant partner but with equal rights as to decision making, it would be invaluable. It might be that would save your investment, but it's still a very lucrative place. It's still a fantastic source or vehicle for investments. The very next one after that is the stock market. You can invest your funds in stocks. Now, I wish I didn't have to explain what stocks are, but hey, this is supposed to be an educational series to cater for the needs of the people that listen to me. So if you have any questions, if at any point I've spoken above your head, please do not hesitate to put a question in the comments and I will get right back to it and still simplify if I've gone too technical on you. So stock is basically shares. When you buy shares are single units of a company. Most companies that are public can sell their shares to the general public, and that is why public companies that are limited by shares usually have the suffix PLC after their name. These companies sometimes have their shares quoted on the stock exchange where a lot of trading, buying and selling is going on. Stock of fast-moving consumer goods companies are always a good deal because they sell. And people are still buying, they don't go out of fashion. Now, it's possible that the stock is not rising astronomically such that you go to bed and you wake up and then you are suddenly a billionaire because the company you invested in boomed overnight. That happens abroad, yes. When somebody, there's so many dynamics that it goes into stock trade, and I am not going to begin to put myself forward as someone who knows how that landscape works. I have people I work with. I have people I can recommend to you to work with. But basically, is buying shares in a company that has a good future and then waiting for your stock in that company to appreciate over time. You shouldn't do this by yourself unless you have taken time to study the stock market. understand how it operates, understand what can cause a bull market, understand what can, when I say bull market, I mean what can cause stock prices to crash or rise, understand the dynamics, understand the politics, because there are politics in companies that can actually affect stock prices. So you might need to get involved, or you might need to get a stockbroker who is involved to handle your portfolio if you decide to invest in stock. Now, there are other things traded in the stock exchange that are not actually stock, so to speak. One of those is the exchange traded fund. Now, the exchange traded fund is a basket of securities. It can extend to stock, yes, it can extend to commodities, it can extend to forex, but it's a basket of securities that is traded all day on the stock exchange. And this means that the price is always moving forward, moving backwards. It takes a level of knowledge of that landscape to invest in it. So I would not advise you to do it by yourself, except, of course, you undertake the study of how these things work to make it happen. One more medium risk investment that I would like to talk about today is the real estate investment trust, i.e. REIT. You'll probably come across it. You can read further on it. You can do your investigation, conduct your research, and know how it works. But these trusts invest in real estate. But you see, for you, when you invest in the trust, you're not going to be owning real estate. You're not owning a unit or an apartment or a commercial property or private property that you're going to be letting out to tenants. What you're doing is you're pooling funds with other people for the owning of these apartments. So what you own is a portion of the trust, but when the apartments are built and let out, the funds from such investments come back to you. There were so many of them. You need to always keep your eyes open and your ears open to come across these kind of opportunities. I've been offered several opportunities to own properties abroad, and then, of course, the way the property market in those spaces run is standard. People pay, they default, there's an automatic system for getting them out. Unlike here, where once they are an annual tenant, they are protected by law, and then it can become quite a tussle to get them out. Where you even have tenants at law, tenants at seven. There are different types of tenants that even refuse to move out. Unlike abroad. Abroad, the laws are applied automatically. You get your income when you should. Even when there's trouble, it's easy to resolve. It doesn't have to take forever. So that is one more investment vehicle you could consider. But please, the ground rule is investigate before you invest. If you do not understand, consult an expert. If you need an expert to consult, you can please ask for advice, and definitely I would give referrals. So we continue from here tomorrow, still talking about medium to high risk investments. I'll be talking about mutual funds, and of course now the ones that we have experienced in recent times, that's the forex and the cryptocurrency. So please stay tuned while we'll continue this conversation tomorrow. Take care.